Good afternoon. George Cavaligos for HFT Bonds. Correction continues in the bonds and notes. A little bit more downside today. Tough trade though. It's been just like slow rot. 512,000 tenures. That's half of what we usually trade, and 172,000 bonds. Again, a little bit more than half of what we usually trade. Makes sense, I guess. We're going into the September unemployment number tomorrow morning. You know, the day before non-farm payroll is typically a corrective day, and since the correction started Friday, we followed through a little bit here. Actually, bonds kind of meeting some targets. This 133.18, the current low, is equal swings off of the highs from what was it, Thursday night? Yeah. Problem is the 10-year didn't quite get there yet. 126.14 would have been equal swings down in the 10-year, and it's holding up. The current low is 20.5. So we did make a little bit lower low, but not meeting those targets yet, and really no bounce. There was one little bounce this morning where we got back up to unchanged, and then the sellers came back in again. I really don't see a ton of positions. Now, we don't have the CFTC data anymore, or yet, because of the government shutdown. You'd think they should have this stuff automated. Shouldn't be a problem to punch it out, but it's a week old to begin with, and they can't get it out, so we don't really have a good handle on it. Open interest and volume figures have shown some increases in open interest, but I gotta imagine with the sell-off that we're seeing today and what we saw on Friday that longs have squared up pretty much here. I gotta imagine we're going to see a little bit more downside into the data tomorrow morning. Again, I'm looking for that C equals A target on the 10-year down around 126.14. If we see that, that probably means bonds are going to be down towards 133 even area. Something to look forward to overnight, maybe into tomorrow's data, and then let's see what happens with the data. I'm not even sure it matters that much. It's old news. All the other data that we've been seeing has been fairly weak. I think somebody states, I can't prove this, but the number that kicks in my head right now, 7 of the 10 economic numbers last week were weaker than expected. The housing data this morning was weaker than expected, but it's not prompting anybody to worry about buying bonds at this point. So wait and see what the data brings tomorrow with the non-farm payroll numbers. Can't believe we even look at that stuff anymore. Who believes it anyway? Have a great night. I'll see you in the webinar starting 3 o'clock this afternoon. Free webinar. Got 45 minutes. Come on and join us. Brad's going to be there. Some great macro views from him. Fari and Ashraf, always a good read. Have a great night, guys. See you tomorrow.